Hey guys, Jitin here. Welcome you all to my YouTube channel Finance Master India, where my vision is to make India a rich country. In today's video, I'm going to cover all the important details of upcoming Paytm IPO. Before I start, I request every one of you to please share this video with your family and friends so that everyone gets benefited with the details that I'm going to share on Paytm. So let's get started. Paytm's complete name is One97 Communications Limited, and it was created on December 22, 2000 at New Delhi. It is one of India's leading digital ecosystem for consumers as well as merchants. The company has more than 33 crore users. Out of these, more than 11 crore users transact on its app annually, with more than 2 crore registered merchants. It offers payment services, financial services like mutual funds, insurance, and it also offers commerce and cloud services. Even though the company was formed in the year 2000, it launched the first digital mobile payment platform, Paytm app, in the year 2009 to offer cashless payment services to customers, and now it has become one of India's largest payment platform and the most valuable payments brand with a total brand value of 6.3 billion US dollars. Paytm is available across the country, with Paytm Karo becoming a brand name on its own for hundreds of millions of Indian consumers, shopkeepers, merchants, and small businesses. The app helps consumers do cashless transactions at stores, top up their mobile phones, online money transfers, pay bills, access digital banking services, buy travel and entertainment tickets, insurance and investments, borrow money, and many, many more other things. Businesses can use the platform for advertising, online payment solutions, offering products to customers, and loyalty solutions. Paytm remains the easiest way to transact across multiple methods. Paytm helps small businesses grow their business by allowing them to accept payments, acquire and retain consumers, improve their business operations, and access financial services. Businesses can use in store and online payment solutions to accept payments through Paytm, as well as major third party payment methods. In addition to helping business ecosystem facilitate more business, they also provide software and cloud services that allow large, medium, and small businesses to improve their operations and access important financial tools such as banking, wealth, and credit facilities. Paytm is professionally managed company with no identifiable promoters. However, Mr. Vijay Shekhar Sharma is widely known as the face of Paytm. And I'm sure you must have seen him in the latest viral video dancing in his office when IPO was approved by the Securities and Exchange Board of India. I'm sure you now know what Paytm does. Now look at the competition. Paytm operates in a very fast growing market with top 3 players accounting for more than 90% of market share. PhonePe leads the way with 44% market share in terms of number of transactions, followed by Google Pay at 35% and Paytm at 15%. Amazon Pay and others account for 2% and 4% market share. In September 2021, all players competed for 373 crore transactions, and that's a huge number on a monthly basis. If we talk about market share in terms of value, again, PhonePe stands at number one with 46% market share, followed by Google Pay at 38% and Paytm at 9%. Amazon Pay and others account for 1% and 6% market share respectively. The total transaction value in the month of September 2021 stands at 6,64,204 crore rupees. Now, that's a huge number, guys. Now, let's look at the opportunities for Paytm. The macroeconomic factors that may impact Paytm are rising per capita income and consumption. As India is growing nation with growing GDP, this may have a positive impact on the per capita income and consumption. India's economy is projected to grow at a rapid pace post COVID-19. The International Monetary Fund has projected a growth rate of 9.5% in real GDP in the year 2021, higher than the developed economies of United States and developing country China, enabling the GDP to grow at a compounded annual growth rate of 9% over the next 5 years to reach 4.2 trillion US dollars by 2025. At this level, India is projected to become the third largest economy in the world by 2030, according to Center for Economics and Business Research. India is one of the youngest nations in the world, with a median age of 28 years compared to 38 years in China and the United States. In the year 2020, 55% of India's population was in the workforce age bracket of 20 years to 59 years. Moreover, according to the United Nations, 375 million Indians are Generation Z. That means in the age of 10 to 25 years. And 333 million Indians are millennials. That means in the age of 26 to 39 years, accounting for 51% of Indian population. With a combined Generation Z and millennial population of 708 million, India has the largest Generation Z and millennials population base globally. Generation Z and millennials are considered as India's biggest spenders, which is likely to increase further as they enter their prime earning and spending years. India has the second largest urban population in the world. Based on World Bank estimates, 35% of India's population, which is equivalent to 480 million people, resided in urban areas in the year 2020. This trend is expected to reflect in greater purchasing power in the urban centers with stronger growth opportunities across industries. Yet, there is a large headroom available as compared to world average of 556% urban population in the year 2020 as per World Bank estimates. India is expected to grow across digital technologies. This growth is expected to be driven by affordability of internet, continuous improvement in telecom infrastructure, increased adoption from tier 2 plus cities, rising popularity of social media, competitively priced online offerings and growing trust and adoption of online payment platforms. Overall, digital commerce in India is expected to grow over 3.3 times in the next 5 years to more than 300 billion US dollars in the year 2026 from approximately 90 billion US dollars in the year 2021. India is a country of hundreds of millions of young and aspiring consumers who are underserved in payments and financial services. There are millions of small businesses in India that would benefit from having increased access to affordable software, technology, and financial services. These consumers and small businesses can be served through technology led digital infrastructure, and thus, Paytm has a large addressable market in India. India's payment landscape has transformed over the last 10 years because of the emergence of mobile payments and government's vision to transform India into a cashless society. As a result, unique online transacting users are expected to grow from 25 crore in the year 2021 to 70 crore by year 2026. The Indian financial services market continues to be significantly underpenetrated. Across all these traditional financial services products, India has growth opportunities supported by technology and rising digitization. The government and the regulators have done some great work to enable Digital India through reforms and encouraging innovation. Additionally, Reserve Bank of India's introduction of payments bank licensing, wallet licensing, Aadhaar universal identity and creation of UPI has given a positive momentum to digitization of payments. Now, let's look at the competitive strengths of Paytm. Paytm's ecosystem allows them to capture wide addressable market in India at scale across payment services, e-commerce and cloud services along with financial services. The market segments that they serve has a massive scale and growth and are significantly underpenetrated, and they have the potential of technology to grow the industry. Paytm has a massive recall value among consumers. Paytm is available across the country and the word Paytm Karo is being used extensively in the market. Paytm knows the way Indian consumers spend and save. and the way merchants operate their businesses. Each transaction provides insights to improve consumer and merchant experience and the quality of their engagement on the ecosystem. Paytm is the only payments company in India that, together with their affiliates, own each layer of the payment stack. Payment of Paytm offers services such as Paytm Wallet, Paytm QR, Paytm Soundbox, Gold Investments, Fixed Deposits, Paytm Postpaid, Merchant Cash Advance, and FASTag. Paytm benefits from economies of scale, which leads to low acquisition costs, higher monetization, and lifetime value of consumers and merchants. Paytm's focus on solving big problems makes them an attractive place for best in class leaders who bring a combination of domain expertise and a hunger to redefine the way Indians access payments. Their culture of innovation allows them to solve big problems using technology by developing great products. Paytm's IPO will open on November 8 and close on November 10. The shares are expected to be credited by November 17, and the listing will happen on November 18. The company is raising 18,300 crores, out of which 8,300 crores is by way of issuance of new shares, and 10,000 crores worth of shares will be sold by the existing shareholders. The company has reserved 75% of the issue for qualified institutional buyers, 15% for non-institutional buyers, and 10% for retail investors. The IPO price band is between rupees 2080 and rupees 2150. You can apply for a minimum of 6 years, translating into rupees 12,900 at upper price band and a maximum of 90 shares at rupees 1,93,500 at upper price band. The company plans to use 4,300 crores for growing payment ecosystem, and rupees 2,000 crores will be used for investing in new business initiatives, acquisitions, and strategic partnerships. I hope I was able to give some good insights on Paytm's IPO. Please share your feedback in the comments section and don't forget to subscribe the channel and hit the like button. Your suggestions and feedback will help me improving the content in my subsequent videos. Thank you so much for watching. Have a great day. Bye bye.